Is that it? Done. There we go. I didn't have the volume turned on, man. Okay, I feel dumb. How are you guys doing? Did you miss me yesterday? Thank God, I think you can make that a little louder. I hope none of you guys blew your accounts yesterday without me because it was crazy out there. Hold on a second. Let me start up here, share vision, and just grab this key here and put it in and start. All right. So yesterday, man. Okay, so to the charts. Which one is it? This one right here. Okay, so the treasuries have kind of been all over the place. So on Monday morning, there was quite a significant drop, kind of some optimism coming in, also some fears about inflation coming in. But most of the day, they traded up. And now we're kind of getting the same thing. It's like it's down, it's kind of trading up. So we're like on quite a roller coaster in the treasuries. Oh my gosh, it is showing the wrong screen. What the heck? So no, not that one. Display 3. There we go. Okay. So you can see the roller coaster ride in the treasury. S&P 500 lower. So they were kind of looking okay in the morning, and then it's just all day. And then here overnight, a little bit lower, kind of a little bit pushed down. Oil just going to dizzying heights yesterday, falling back quite heavily. Largest range ever in oil. Guys, do not trade that. Seriously, you will blow your account. That is insane. You've got to have a really big account. You be trading oil right now, all right? Natural gas actually falling down here. So I suppose that's good, but just remember, the Russians could cut the gas off at any time. That would be pretty scary. Okay. Gold and silver. Gold finally above the 2000 level, actually pushing 2020. And man, I tell you what, gold and silver, they've struggled for so long, but ever since January, they've just been on a good run here. And sky's the limit. Sky's the limit for gold and silver. Kappa having a big spike overnight and coming back. So what we were seeing here, hold on, let's just pull up Bitcoin here real quick too. Bitcoin taking a little bit of a dive last 2 days, not looking so hot over there. And the dollar index back up to 99. Now they're at 90. Remember 97 was kind of hot? 99, we could be back to 100. Like we're in like full on crisis mode right now. The Widowmaker, yeah. So yesterday we saw a run in the nickel market. So there were some large producers that had leveraged shorts on, and they had to take them off. There was I think it was some Chinese firm took like a $2 billion loss or something like that. It's getting crazy out there. One has to wonder what happens if that sort of, I don't think it's over yet. I think we're going to see more moves like this. And when it hits, if it hits gold or silver, like, look out, right? My mouth must be dry. I'm hearing my nose. I'm like, the mouth, it doesn't sound good to me. That a little bit better. Yeah, it's a little bit better. I guess I messed around with my setup a little bit over the weekend, and it's just a few little problems here and there, but I think we got it all sorted out. And we're streaming on Share Vision. I'll give you guys the link over here if you want to pull it up for us. And yeah. So, what's my plan for today? Well, I'm going to sit here. I'm going to watch these treasuries. But when they are trading 600s, no thank you. No thank you. Make sure, I don't have financial juice turned on. We did have, let's see here, U.S. international trade, negative 89.7 billion versus an expected 87.3 billion. So the trade deficit just keeps getting worse and worse. I don't so there's like no news. There's no news on the docket, but look at the treasuries, man. This is I'm I on the right one. I had to like redo, man. So I come in yesterday, does study and research and stuff, and my whole work, I still start the workspace, but the whole workspace is just screwed up. Whole workspace was just hosed. So I had to like rebuild the workspace, and make sure that I have the right, you know, expirations on here. But I'm on '06 on all three of these. MES hasn't switched over yet, right? That's like later this week, next week. So we're on the right one. No. And they're only putting 700s up? Like what? Like what? There's a pretty big drop overnight, though. I wonder, is there something I missed in my morning? Okay, oil spikes to session high after report Biden to ban Russian oil, LNG, and coal imports today. Well, that would not make sense for why treasuries are down, but we are seeing a spike at about 30 minutes ago with oil pushing to 124. Man, what a madhouse. Like, I'm super calm about it because I don't have a position. And you know what? I don't think I'm gonna take a position. Good. I actually I shouldn't say that. I shouldn't say that because that would be no fun, right? We gonna trade this, my good boys. Need to adjust my camera there a little bit. There we go. Oh my gosh, a fire! Quick, put it out with Cap. Right? Here's what I don't get. Don't get me wrong. Russia needs to be sanctioned. I am 100%. Listen, there are these guys on my side of the political aisle in the Republicans that I think are acting just, dude. Like Uzi, we originally came across like we know each other originally from the Donald subreddit, right? Have you checked out Patriots.win lately? Because I am just disgusted by some of the stuff that I see on that. Let's see if I can find an example. Patriots.win. Let's see here. Okay, so hot story. Shell announces intent to withdraw from all Russian oil and gas aligned with gas aligned with new government guidance. As an immediate first step, we will stop all spot purchases of Russian crude oil, shut service. Okay, so let's see. If this was Reddit, oh, it must have been somebody else. There was somebody on here that was really regular that it came from the Donald. I don't participate in forums or groups. Okay, gotcha. Fair enough. Let's see here. What do they say? This will end well. Da da da. Well, I don't see anything too interesting in this one. I've seen some threads on this forum now, man, that are like just straight up championing Russia. Like there was this thing where, man, where can I hope maybe I find it here. Should I really try and find it for you guys, or do you not care? You probably don't care. Well, there was this one thread that was showing, it had some of the propaganda documents that had been given to the soldiers. It was talking about how, you know, they're trying to free Ukraine from the Nazis and all of that sort of stuff. And the people on the Donald were championing it. They're like, see, Russia's trying to stop the degeneracy and yada. I'm like, what the fuck? What the heck is wrong? What the heck is wrong? It came up invalid live? What does that mean? Try refreshing. I mean, I can see it. But maybe that link that I gave you is wrong? Is that link bad? Oh, when I pull it up, hey, Air Cages, haven't seen you in a while. The one time I go on vacation, they start World War III. Have you been on vacation that long? Dude. Yeah, you're right. Share Vision. It seems to be it's just saying connect your streaming software. So it's having an issue. Let's try stopping that stream and starting it. Okay, so anyways, there's some people on my side of the aisle that are like straight up championing Russia. There's other people that it's like they seem to be more concerned about themselves or something. It's like, well, you guys maybe don't realize the consequences of shutting Russia off from the world economy. And it's like, well, yes, we do actually. And we know that it will kind of suck in the short term, but it's probably actually not as big as you would think. Well, then we get this stuff like the oil prices. Okay, oil is spiking to $130 a barrel. Okay, this is something that is likely to cause a recession. And what does Congress do? Hey, we need to ban the rest of it. We need to ban all of the oil from. I'm like, not helpful, guys. I don't want a recession here. I gotta tell you, a recession in this current situation could be really ugly. Yeah? It's actually kind of funny seeing media sharing pictures of heroic soldiers with Nazi regalia on their uniforms. Have you seen that? I haven't seen that. Ukraine does have the world's largest and probably only open Nazi. Yeah, that is true. There is a group, but again, this is like one of those things where it's like, man, I got to tell you, one of this, I find it strange to me, but it seems like one of the logical fallacies that people are most susceptible to is guilt by association. Guilt by association. It's like you talked to this one guy that one time and now all of a sudden you're evil too. People fall for it so easily. It's crazy. Hey, I restarted the stream on Share Vision. It looks like it's okay now. Why don't you give it a try? Now, when I do that and then I refresh, it says connect your streaming software to go live. Oh, you know what? Because I don't think that I clicked the start streaming button. Okay, wait. You think that the recession is inevitable? Well, I don't know if it's inevitable. Okay, yeah. I just needed to start the button. Try the live link now. Here, I'll give it to you again. Sometimes the financial juice guys don't mute their microphone. I don't think that their microphone actually has a mute button. It has a volume button, and they don't turn it down all the way sometimes. No, I think that if they ban Russian oil, that certainly starts to put recession scenarios on the board for me, because oil prices getting so high that it starts to destroy demand. That's one of the things that has very reliably sent us into a recession, right? Like the last two major recessions. How ducked are we right now? Is the Fed going to do something? Well, what can they do about the price of oil, man? Like, here's the thing again. Nickel. Did you guys see the chart of nickel, man? Gee, let me see. I'll try pulling it up here on TradingView. Nickel on the London Metal Exchange was just like absolutely. Nickel futures. Interesting. TradingView doesn't get them. Well, we probably could see it on this one. Probably we'll see it on this chart. Yep. Look at that. Like, dude, seriously, it went from $2,000 to almost $6,000. So it like tripled everything. Holy crap. Like you ever seen a chart like that, man? Oh mama. On a commodity? On a commodity that is just nuts, right? I don't I think we'll probably continue to see moves like that because what's happening is you get these producers and they tend to go short the commodity, right? Because they deliver, right? So they go short so they can deliver it. But they sometimes they will go leveraged. And so some of these guys had leveraged positions and got stopped out of their shorts. So they get margin called. They have to, they have to cover all of their shares. It's a mad dash, and these aren't super liquid markets or anything, right? So one big player getting stopped out of a margin position like that in nickel, yep, it just completely destroys that. I mean, market goes completely dysfunctional. I mean, look here on the treasuries. There's like zero liquidity. Nobody wants to. Nobody wants to play that. I'm not going to be putting my orders at risk in that kind of a environment. It's just like who knows which way it's going to go. Maybe if a really good news headline comes in, we get a really good idea of which way the treasuries are going to go. Otherwise, I'm just going to be like, no thanks. Do you post your trades too? I mean, separately post your trades with plots on charts. So not really. I actually seen it, to be honest with you. I try to be a little bit sneaky about the positions that I take. I I will not necessarily. So I think that the way most people expect this to work is I'm going to come in and I'm going to be like, "Okay guys, I'm going to go long the S&P 500. This is our entry. Everybody go long the S&P 5 and I want you all to follow me." Nah, this is not the way that I work. I mean, you can make money that way. You can front run your whole, but I'm not. I won't do that to you. And I don't want, if I have a winner, for it to be because I have a stream, right? But not only that, but it kind of makes you target, especially like here in the treasuries. You have this position, they're like, oh yeah, we could just move it down 2 ticks. We know that Seth and all of his traders will get out, right? So I'm kind of sneaky about it. I don't want people to try to follow my trades. I am trying to teach you guys to be able to do what I do without me. Maybe I shouldn't do that. Maybe I should try and make you guys dependent, only give you, be a signal service so you stick around and get more viewers. But I want you guys to understand how the market really works. Avoid all of these nonsense ideas that are pushed about by a lot of retail traders and really truly understand the markets. So, yeah, I have a lot of YouTube videos about that and everything, but I don't necessarily. Okay. I wanted to see where you enter on the chart so I can learn. Oh, I got you. Well, so that's the next thing, Cena. Chart doesn't matter. Chart doesn't matter. I know this is usually where I lose everybody. They're like, well, I don't believe Seth, but I'm telling you, dude, price is bullshit. The past history of price means almost nothing. Obviously, when we come in here at the beginning, I come over here and I look at the charts and I go, well, okay, let's see here. Copper having an interesting day. But the only reason I'm looking at these charts is because I wasn't there, right? The price that it was at, and the fact that it was up here and then it came back down here. I don't necessarily care about that. What do I care about? I need to have a reason to think that new orders are going to come, right? So let's say that there was some new headline about a peace deal in Ukraine that sounded really promising, right? We're selling the treasuries right then and there, whatever price it is. I'm selling it because I know that most people aren't sitting and watching and listening to a news squawk and hearing it immediately like that. And I know that there's going to be a lot of orders chasing that. So I want to get ahead of those orders. That is like a really clear signal. But sometimes it's something a little bit more amorphous, like I know what the sentiment is, or it's a certain time of month where we see certain kinds of rebalancing. I can have a systematic strategy that could be calculating how much of a certain asset a certain type of player needs to buy and to be able to predict where we're going to go based off of that. But what I don't do is look for some pattern in the price and try and trade off of that pattern. So you're not going to learn much. In fact, you might learn the wrong thing by coming in and looking at where I get in and out on a chart, other than how well that trade did, right? That's why we're watching the order flow. That's our primary concern, because the order flow is telling us what's actually going on in this market. What does the order flow tell us right now? Very illiquid market, right? And that's basically how I approach it. So I'm wondering if I should make this 10-year a little smaller. Wait, so if I do that, isn't there a I'm on my demo account with that one now, right? Yeah, okay. I don't think I have the setting on to make it smaller. Reduce Smart Q font. There we go. There we go. That's a little bit better. Give us a little bit more room there. I know that before we had this thing over on the side a little bit bigger, but okay. So NASDAQ Killer, where you been? I took Monday off so that I could work on video scripts for you and do more studying. Honestly, I didn't get too much done yesterday. Yesterday was kind of more house cleaning, but it was good work that had to get done, so I'm really happy. I'm actually new to the DOM and find this totally new. I've traded using the DOM on domestic stocks market, but the DOM on international markets is very different. Really? Yeah, well, I mean, do you get full depth of market? That's kind of the critical thing, right? Is can you see the limit orders at each price, right? Because what we need to be able to do is we need to see what's there resting, but more importantly, when it trades, how much actually trades, and like, are those limit orders canceling or whatever. You look nice today? Oh, good. You know what? I had a good workout yesterday. I don't know. Now, you know what it is the puppy. The puppy is sick. This puppy is sick, and so I'm looking healthier. I'm stealing his youth. No, of course not. Would you say chart reading doesn't work in financial markets? I wouldn't go as far as to say it doesn't work. I think that doesn't work is not precise enough. Okay. I would say that in modern US markets, it is not very effective, is what I would say. So if you go to the Asia, like you go to Singapore, let's say you go to Singapore. If you go to Singapore, there are some markets over there where you can kind of read some things about trends, and you can make money just following trends over in Singapore. But in the US markets, they are so developed that those edges have kind of been arbitraged out, right? So here let me give you a little bit deeper of a dive, and hopefully you go and you watch my YouTube videos. I the most recent one, Price is BS. That's my magnum opus, man. If you watch one video, watch that one, because that really is the one that elucidates what's really going on. But essentially there was this idea in financial markets that the market priced in all available information. If we were up or down or whatever the deal was, it was because there was information out there and the market was pricing that in. And we found two things. We found, well, a bunch of things, but basically the market isn't very good at pricing in that new information. So you might see a lot of people trade off of that new piece of information, but how far it goes is highly dependent on how many people trade. So you never really get to like a fundamental price because of that. And then on top of that, there are some players in this market that are just absolute monsters, like, index funds, for instance, that have such a large impact on the markets when they're doing their trades. And their trades could have absolutely no information behind them whatsoever, but they still move price, right? So they thought the market is informationally efficient, but not statistically efficient, is basically what technical analysis people said. They said, well, even though you can't necessarily catch an edge by, you know, the market already knows everything, but there are still statistical inefficiencies. You can still look at a chart and see what everybody else is doing and make a decision based off of that and try and ride the trend. And what the empirical research has found is that it's exactly the opposite. Markets are not very good at factoring in new information, so they are not informationally efficient. But because the market is so sensitive to those new orders, they arbitrage out statistical inefficiencies extremely well. Okay. So, what you're going to see, and again, a lot of research backs this, there was in the 60s. If you go back and you go into the charts and you go to the 60s and you use your traditional technical analysis, let's say like your time series indicators, like RSI, for instance, right? Moving averages. Those work pretty well on stocks in the 50s and 60s. And then as soon as the computers came around in the 70s and then definitely in the 80s, all of those strategies stopped working. So what happened? Well, those edges got arbitraged out of the market because again, it's very easy to do. It's very easy to do. And there are edges out there that exist today. For instance, Renaissance Capital, they have an edge. We don't know what it is. They know exactly the amount of contracts to trade to get that edge, right? And they don't trade anymore because then that could tip the rest of the market off to it, or it could eliminate the edge. So they don't want to trade too much. That's why the amount of money that goes into the Renaissance fund, it's like capped because that's just the maximum amount that they can trade without, ruining their edges, right? So that's why I wouldn't say that it doesn't work. It's just, it's not very effective. And why is it not very effective? Because the competition of the market have removed those edges from the market, right? And we see that in other places as well. There used to be patterns that you could see in the level 2 that, it used to be like, oh, if you see them stack here and then pull and do things in this kind of a pattern, that's like a signal for you to go long, and you could do that and you could make money. Nowadays, maybe you can still do that, but I've tried doing that. I didn't have much success with it, right? I still find the order book extremely useful because that's showing you what's going on, but I'm not looking for patterns, right? I'm looking for information. I'm looking for something that's really going to predict future orders. And what the current price is or how it has progressed is not very effective at predicting those futures. I'm not going to say that it doesn't predict it at all. It's just the amount of effectiveness that it has is pretty small, right? Compared to if I know an index is rebalancing and I front run them, that's super effective, right? Now, don't trade on inside information, obviously, but sometimes you can predict those sorts of things if you know how the institution works really, really well, right? Let's see here. The way I was using the DOM in stocks market was mostly dependent on the number of sitting orders, and I could easily see one side having many orders than the other. But in the ES DOM, for example, order amounts are almost equal. Ah, I got you. Yeah. So that might be that in the stocks that you were looking at were not as efficient because they were in an emerging market, right? I suspect I have a theory that you can get a directional signal out of the order book from looking at the depth of market and doing some funky math and everything. But I think that there is some sort of a hidden Markov model that tells you which direction you should be trading based on it. That's a little bit more complicated than that. It's like if the longer term trend is up and you see an imbalance on the bid side, then they're going to go towards the imbalance or whatever the deal is. I think that with machine learning, we might be able to sort out a more hidden system, but just watching it and saying, well, there's more bids than offers. Yeah, that doesn't tend to work. But again, you got to be able to see what's going on, right? So that's why the Jigsaw DOM it will show you it has these columns in the middle, right? These columns in the middle are the market orders. So I can see the market orders hit into them and I can see how the offers react to it. And that tells me a lot, right? If I'm hitting into this 12 right now, let's say that there's like 3,000 contracts absorbed at 12. That's a possibility. Well, there you go. Almost 2,700. Okay. So that says to me somebody has been selling. They cleared him, probably. So that doesn't 100% predict where we're going to go, but you could probably get one or two ticks off of that just because given the context, I can say, okay, somebody was selling, they're done selling, I'm going to get the post meta order impact. And they'll kind of come back a little bit and then get stuck around a price where like the majority of it traded. So probably like you come back a few and then you might get stuck at 12. Although I don't know if 2778 is really enough to cause that particular thing, especially when the liquidity is so light. But, those are the sorts of things that I look for. But sometimes it'll give you a clue that like it's actually some hedge or something like that. Like you can know given the context, right? So that's why I want to know how much actually traded. Now, on the other hand, if we traded up and up and up and only like 100 contracts traded at each one of those spots, well, now I'm saying, the market maker, for some reason, doesn't want to take fills against that, which is a little bit odd when the most recent trend has been down, right? So maybe he knows something, right? Those are the kinds of those things that I look. So it's not like a straight signal, but once I come in with the context and I understand the way that the market moves empirically, then you can kind of make these calculated judgments about what's going on in the market and whether there are more orders coming in the future or not. Does that make sense? I know it's kind of a little bit amorphous, but it really makes sense. I have a video called I don't even remember what it's called, but it's like 2 videos back and it talks about empirical properties of markets and how liquidity holes form and the impact of large meta orders on markets. Once you watch that video and understand how the large meta orders impact markets, and then you start trying to watch for that in the DOM, what's going on will make so much more sense, man. It won't just be like, well, I moved here and I moved here. All of a sudden it'll be like, okay, there was a large meta order selling here. He finished here. This was a post meta order impact. They came back to balance here. And then somebody started taking it the other way. It was there was still a relatively light liquidity behind us, and so they pushed through it, and we ended up going higher because of that, right? And then you can get into this situation where it's like, I hear something on the news squawk, or I know something about the sentiment, and I know which way the orders are going to go. Because I know the orders are coming, and because I know what the impact the orders have on markets, I can predict extremely accurately how it's going to go, like where it's going to stop and pause and the timing of it and everything. What are you thinking for the CPI this week, Seth? Okay, so it's a good question. One of the things that concerns me in this market was the non-farms last Friday. I know you asked about CPI, but come back to the non-farms. Non-farms was really good, right? Nobody cared, right? The market just completely ignored it. CPI, if CPI comes out and it's like it has been, which is kind of like in line with expectations, or maybe 0.1 higher or lower, I don't think that the market cares too much. I don't know if the market cares too much. I think that the market is pretty consigned to the Federal Reserve is going to raise rates in March, but maybe after that they're a little more hesitant to raise rates further until we've sorted things out. But I don't know, because it's a difficult situation for the Federal Reserve, right? Because Federal Reserve can only control the amount of money out there, right? So they can create, or well, I don't want to say create. Let's say they can encourage or discourage more economic activity by the interest rates that they set. but they can't control what the supply is on various commodities, right? So oil being super high, that's going to impact your economy, right? And that can destroy demand. And usually, what happens when that demand gets destroyed is we have a recession, and then oil goes back down to a reasonable price, right? So, what can the Federal Reserve do in that situation? Well, they can continue to raise rates and discourage economic activity and bring that demand down faster. But if oil is going to destroy it on its own, they don't really need to do anything, right? If anything, they need to be thinking about pulling us out of the recession. Because if you get a situation where we have a recession off of oil and then they can't stimulate the economy, that's a real problem. But maybe they don't have to. Maybe they can just say, okay, we just keep interest rates where they are and we'll do quantitative easing again, right? Could be maybe part of what they do, right? So that might be the sort of thing that we get. On the other hand, could be like what you were suggesting, Alex, which is like there's a lot of inflation that hasn't been properly factored in by the analysts, and it ends up being a lot higher than anticipated. And like, right. Although I suspect that the most recent inflationary pressures probably aren't going to show up in the print, so it may actually be a little bit lower. What are they looking for right now? I should come in and look. We got 2 days for it, but okay. So they're expecting spot 8, and it was spot 6 last time. Yeah, I think if anything, it's going to be under expectations. But you know what? That one's a super hard one to predict. So I'm that's wouldn't trade off of that. Wouldn't trade off of that prediction. But I suspect that it might actually be a little bit lower than expected. But then what will happen is when you come into the April CPI could be ugly. And I think another thing that you're going to see is producers having high inflation and eating it. I think you're going to see a lot of that still. I see so many liberals on TikTok complaining that we're being price gouged, that there's no inflation, it's just companies are greedy. Nah, like the PPIs and CPIs show that they're eating those increases somewhat. So the companies are actually kind of taking hits so that because they don't think that you'll pay more. Okay, can I also ask what kind of trades you make? Like how big moves in terms of risk? Oh, okay, so this is a good question too. So, the only thing that I seriously look at in terms of how big of a trade I take is that I would prefer that my stop is further away than the natural oscillations of the market. Okay, so if I come in here on my treasury chart right here on the 10-year, I have these little swings marked and it tells me how long each swing was, right? So I can just kind of eyeball it. Normally they're like 4, but like look, we're getting like 8s here in the treasuries, right? So what that says to me is that if my stop is 4 ticks, probably my stop is going to get hit, right? And if the market is moving more than what I'm willing to take on, then I don't trade, right? So like right now in the 10-year, which is where I like to trade, I like to go for 10 to 20 ticks. Sometimes I get more than that. Some of these past days I've been getting more than that. On Friday on Friday I took like a $40 loss, I think it was. And then later in the day, I caught a winner. I decided to trade it again, and I caught a winner that almost erased all those losses, and then it came all the way back. So I think one of it's also kind of a deficiency in my own trading. Like we know what to do, kind of, but I haven't found a really sufficient method of calculating it because I can come in and I can say, well, I know that the orders are going to be coming in long from here because of sentiment and news and things like that, but I don't know how many orders are going to come. maybe I need to start tracking it, like how much volume traded through that move so that I can kind of guesstimate it. But that's kind of what you have to do. Instead, what I tend to do is I look for the liquidity hole, right? So you're going to have a move. We're on the trend up now. So far, everything's kind of running the way that we thought. There is a hole at 14.5, right? So let's say that there's a big buy, right? I'm going to try and buy it. Well, first of all, I want to buy it below 14.5 if I can. Because if that's where the liquidity hole is, then I'm much more. In fact, let's put one. Let's see here. We'll be on the experimentation count. This is just a sim trade, but I'll put one right there at 14, right? See if I get filled on the bottom side and if we can just take a tick, right? So I want to get filled below this, and that way it's easy to get filled at 14.5 essentially, right? But then we get a trend, it's moving up, I want to see another hole like this form. I want to see like a bunch of volume trade at that location, and then after they're done trading, hardly any liquidity is placed up at all by the market makers in that location, and it trades back and forth across that price over and over again. I will tend to, if it's a really strong trend, and when I see that, I will expect one final little push, and I'll get out on that little push further. But then eventually it's probably going to come back, right? And that's where I like to take profits. But what happened to me a lot is I'm not able to effectively anticipate where that location is, and it happens too fast. And especially if somebody takes a trade the other way, it can come all the way back and wipe out your profits very quickly. So that's a known deficiency in my trading that I'm working on, right? But that's essentially how I decide where I'm going to get out, essentially. And when you come into the risk reward, I will tend to get maybe 15 ticks favorable excursion, 15 to 20 ticks favorable excursion, and 10 ticks adverse excursion on the micro tenure is what I've been getting lately. Now, when I go and I do like these sim trades on these other markets, because I'm tiny, okay, but if I want to trade spoos, man, we've had to take on way more risk, because right now, from my math, if you want to have like so if you said I will make money on every swing that is less than 10 points in the S&P 500. If I made money on every swing that was less than 10 points and I lost money on every swing that was more than 10 points, that would be break even. Can you believe that? So where do you want to put your stop in the ES? Like 10 points away? So in the ES, I kind of have to approach it a little bit differently. And the ES, I have to say, well, this is just how much I'm willing to lose. And I think that I've been saying like 2,000 or something like that. And I kind of give myself a limit on the number of contracts. And instead, what I'm trying to do is I know that it's going to be too hard in the S&P 500 for me to pick a precise spot. So I average in and average out. So I will take a trade here at 97, and then if it goes down a little bit and I still like it, then I'll try and buy it here. I'll take a second contract here, and then if it swings back up and I get a few ticks, I might take that off, and now all of a sudden my average position is lower. So it's kind of like doubling down to an extent, except for that, like, it was planned ahead of time how much risk I was going to take, and that it was okay for me to do that, right? And that's kind of how a lot of market making strategies work, is they're able to take on a lot of risk and make money even when the price is largely moving against them, right? Well, okay, so I don't know if they're going to fill me at 14.5, but this kind of shows another dimension. So I've kind of been talking more like directional and everything. This is more the micro. Like, what is the most efficient way for you to get filled in everything, right? For it to tick into me, I was like, what, 400 in line, and then 1,500 had to actually trade into 14, and it didn't actually tick down. That's very, very good for me. That's what I would like to see happen when I'm using limit orders, right? Is they fill me, but they don't go through me. Yeah, martingaling is bad. Pre-planned averaging across a range isn't martingaling. Yeah, exactly. Because what I'm doing is I'm still saying if it goes $1,000 against me, then I'm done, right? I still have a set I still have a set risk point, but I am to some extent making money by merely taking on risk because the calculation that I'm making in the S&P 500 is that there is just a lot of noise. And so for me to be able to pick a really precise point is it's just too hard in the S&P 500 I found. So I don't try and pick a precise point. Instead I try and use the noise to my advantage, right? There we go. I got filled on the other end. So we did see 4 contracts go into 13.5, but that's okay. That if I'm doing a one ticker, that's what I want to see happen. And how was I able to do that? Because I knew that there was a liquidity hole at 14.5 that would make it difficult for them to get below 13.5 and above 15.5, right? And how do I identify the liquidity hole? Lots of volume traded there, not very much resting liquidity. And that is my own kind of trade. So the trade itself is not empirical, but the properties of the market that I'm trying to take advantage of with the trade are empirical. Liquidity holes do exist, they're proven, and they have a very significant impact on the way that the markets move. Can't afford to trade that way in bonds, but if I could, I would. I don't know, Uzi. Like, so here's the thing. So here's the other side of this, right? On a long enough time horizon, the survival rate approaches 0, right? So when you work for Taleb was saying this in his book. I was reading that yesterday. I read that for about an hour yesterday during my study time. I worked on the script for a little bit and did the house cleaning, and then I read his book for an hour. But he was pointing out that if you're taking on a risk, the longer and longer you take on the risk, the more likely that risk is to happen and to destroy you, essentially. Which is why institutions that have been around for a really long time, and he mentions Goldman Sachs in particular, and yeah, this is exactly the way that they do it. If I'm setting up a trade for Goldman Sachs, I want zero risk. I want zero risk. So here's how they do it. Is they'll come in and they'll say, okay, yeah, I want to go long the S&P 500 here, right? Because I think that the price that they're giving me is pretty good, and I know that people are going to come in and buy. So I can take some fills in here, but on the other side, I'm selling the actual stock or whatever the deal is, right? So I'm hedged. I'm perfectly hedged. There's absolutely no risk for me, but I still make money from the market making on this over here, right? Risk-free trade, essentially. That's kind of the sort of thing that they do. And why do they do that? Because they know that if I come in and I just do straight market making, eventually there's going to be this move that's so strong against me and I screw up and I lose, a whole year's worth of profits in a day. That's the sort of thing that happens. You're market making and you're not necessarily fully hedged. Of course, there's a certain amount that they're willing to risk, but they're very cognizant of the idea that we need to take on as little risk as possible, and we should never take on risk that is going to destroy our account, right? Now, as retail traders, we unfortunately do not have the resources to be able to make that kind of calculation, right? For us to be involved in the market, we have to be taking on risk to some degree, and that risk does have a possibility of ruin. And that the possibility of ruin for a retail trader is quite high. like in that the chances of a retail trader coming in, especially an inexperienced retail trader, and not blowing the account at least once in a 5-year time period is like it's everybody's going to blow an account in a 5-year period, right? So what I would suggest there for that then is don't trade your whole roll. Don't even put your whole roll in the brokerage account, right? Have like I think the optimal thing would be you have a good job and you have a certain amount of money every month that you can put into trading, right? And you just kind of save that on the side, and then you blow it, you can put more in, and you acknowledge that developing an edge is hard, and you might have to do it for a long time and not be successful, and you might never be successful. You get what I mean? You got to take on risk, essentially. But that's the other side of it, is that the more risk you make, the more reward there is, and actually technically the more likely, at least on an individual basis, that you're going to be successful with that trade. So taking on risk to some degree is useful. I have trouble swinging bond trades. I am at almost at 24 hours on this one. Well, so I've done really well with the bond trades on swinging them. I did take one off on Fridays, so I don't have you notice that my longer term portfolio, that it's not there anymore. We'll install this thing for Evernote. They Evernote updates way too often for as simple of an application as it is. Good grief. Um, but my determination is that right now is that the market is just too difficult to make this kind of determination right now. Like before, earlier on, it was like, well, I can probably let there be big moves up and then fade them because eventually I think that interest rates are still going to rise. But now that oil is going nuts and they're talking about banning Russian oil, that's kind of like all bets are off the table for me now. I don't think that I can make that determination that interest rates are going to continue rising over the long term. It may be the case. I think that the scenario where we have one rate increase and then that's it is a lot higher than it was before, right? So if you're having trouble with a trade over the last 24 hours, I wouldn't sweat it too much because this market is just going to do a lot of really bizarre and random things right now. I mean, they're only putting up 800 lots at most prices right now. That means that if hardly anybody with a reasonable size comes into this market, it's going to move, right? And you're going to overreact to that. You're going to think that it means more than it really does and everything because the degree that it's going to move is going to be something that, like, normally speaking would be like a huge deal. It would be like that only happens when there's big news, right? You think, oh, there must be informational content behind this order flow. But what you actually get when the liquidity gets really low is that the chances of there being actual informational content behind a big move actually becomes less. But then at the same time, there is more informational content out in the market as well, right? So you're getting more big moves, you're getting more information, but a smaller percentage of those moves actually have informational content behind it. Does that make sense? So that makes it hard to trade, right? That's why I've been saying with this volatility, probably better for me to stay out unless I really, really think I have an edge. Some days I will kind of get out on a ledge and be like, well, I think the sentiment is this way, and that's probably enough to for it to work out for me, right? Not in this one. Not in this one. If I take a buy here at 13.5, right? It could move 16 ticks against me just like that. What are the odds of seeing negative rates? I still think that the Federal Reserve will not do negative interest rates. I really think that there would be some big problems if the reserve currencies started doing negative interest rates. Negative real rates for sure, but an actual negative interest rate, I don't think so. Like, think about it. Right now, one of the things that you're seeing is mad dashes for liquidity, right? There are concerns. So far, that nickel trade, and there was one other, I forget what market it was, but there's been like two markets where some major player got stopped out because of this Russia thing, and it's been more centered in the commodities space, right? You could see a situation pop up. Some of the treasury and lending guys have been warning, like Passar has been warning, that there could be some knockoff effects from cutting Russia off of the financial system that people don't expect, and that they wouldn't necessarily happen right away. They did make some predictions for last week that didn't happen, but they're saying there's still some possibilities out there. And what I'm seeing from watching the tape is I see some big players trying to make bets off of that sort of a thesis, but I've only seen two actual, like, real bad things happen, right? Okay. So people are coming in here. They need the money for the liquidity. They're coming in and they're buying treasuries, right? Or the bank, they go to the short term lending window. Okay. Now imagine that the interest rate is negative, right? So the idea with the negative interest rate is that you force their money out into the economy, right? But that's not really the problem, is it? The problem is that these people need financing, and money becomes so tight that they can't get the financing, right? And does the negative interest rate really help do that? Because that just makes it harder for the banks to borrow the more money, right? So I don't think that that would really help in the way that it kind of has in Europe. I think that you're far more likely to just see really crazy amounts of quantitative easing. If shit really hit the fan, if things got really really bad, I think you're more likely to see, right, quantitative easing probably. Makes sense, but I don't know. That's a that's the kind of a thing that is probably beyond any one individual's person's ability to completely expect what will happen off of that sort of thing, because we're talking about situations that have never happened before in extremely complicated systems that are hard to understand. So oh, Octavia says wheat. Yeah, wheat went off too. Well, the tapering is not canceled. The tapering is basically done. The tapering is basically done as far as I can tell. Well, I guess it continues for another week, but there's only another week of tapering, right? And and here's the problem. Again, for the Federal Reserve, you're trying to tame inflation. Does the most recent in things that happen in the market, at least in the short term, are they inflationary or deflationary? Well, let's go and look at the price of many commodities, right? It's inflationary. It's very inflationary. Now, in the long run, that could lead to a recession, but then you get a stagflationary recession. And what's the issue with the stagflationary recession? Uh, in a stagflationary recession, the Federal Reserve can't do much, right? And in fact, eventually, last time we got a stagflationary recession, eventually they just came in and said, we need to raise interest rates and deal with the inflation. And it wasn't until they did that, and it was very, very painful for the markets when all of that was happening. But eventually they got rates to a spot where things kind of tamed down, and then they were able to have prosperity again, right? But that's not an environment that you want to get into. So for the calculus for the Federal Reserve, does it make sense for the Federal Reserve to just go all easy money right now? No, not yet. Probably better for them to just stick with their plan in March and take a wait and see attitude with the future, because they can always just not raise rates again. Because I mean, there's still accommodative. If rates are, a quarter of a basis point instead of zero, that's still accommodative, right? Is it true that the bigger the move, the harder to arbitrage the edge? Well, um, what you say arbitrage is maybe not the word that you intended to right there, right? Because an arbitrage strategy, it has more risk when there's volatility around it, right? Arbitrage trade is great when there's nothing going on and there's a mispricing. You just take it, like what I did here. Okay. I know the liquidity hole is at 14 half. If they happen to fill me at 14, I'm willing to take the risk of the adverse excursion. They let me out. But you could have seen how if I had taken that a little bit later, would have moved against me. I would have stopped out of the trade, right? Right. But and another thing is for a big move, you can just trend trade it. So in some instances, it's easier to make money off of that. Some of those trades are like really easy. Ilias, hello, how are you? But then there's more risk to it on the other side, right? So I guess what does it mean harder? Well, here's what I would say is correct. The more volatility there is, the more retail traders get lose accounts, right? I'm pretty certain that a lot of retail traders have lost accounts in the last 2 or 3 weeks. Probably. Yeah. Think of it this way though. It's easier to make money in a market when money is coming into the market. The people that are buying are less discriminate. They are not as good at executing it. They leave a lot of inefficiency out on the table, and that provides opportunities for us, whether we're doing straight market making strategies or we're just kind of trying to swing and catch runs, that provides a lot of opportunity for us when our market is going up. When the market is going down and money is coming out of that market, it becomes very, very difficult to make money to where even the best traders just kind of break even. Why? Where would the money come from otherwise? Right? The money's gone. It's coming out. They're selling it, right? And how are they selling it? They're selling it against you, right? So when I'm seeing money coming out of my market, I want to be less involved, right? Now, treasuries are kind of an interesting enigma in this respect because um, treasuries is a place where you can really see money come into the market short, right? Like in the S&P 500, if we're moving up, money is coming into the market, and if we're moving down, money is coming out of the market, right? But in the treasuries, there can be these situations where people go big time short, and lots of people are putting money on short, so you can kind of make money both ways. Although it's certainly better when the treasuries are like taking the big bull runs. Easier to make money on a bull run in the 10-year than in a bear run on the 10-year. Especially since when you're getting a bull run in the 10-year, you still get these like snapbacks that are really quick, that are a little annoying. Well, that was a pretty good excursion on the downside in the treasuries. When I look at the chart over the overnight action and everything, it's actually pretty typical move. So I wouldn't kind of read that as like a breakout acceleration to the downside sort of a thing that I normally would, but it is pretty heavy. I'm actually not really too sure what's driving this market right now. I'm just like really risk adverse. Now that we had this move down, we are seeing a little bit better liquidity being put on the board. So that helps. But I don't know. We could have taken it from here. We could have gotten 20 bucks if we really had traded. I don't think that I would have taken that trade, but market looks like it wants yield back in the 1.9s. Yeah. Well, we had opportunities like when I was on Friday when I was losing, I was trying to catch 1.8. So I was pretty sure that they were going to stay above 1.8. You kind of see how it's like I can tell, I know I have a pretty good idea based on the information available where the rate should go. But in the short term, that's often, in fact, maybe I would even say usually not what happens. There's usually this move against you that scares you out of the trade and is way more than any of us are willing to take on the risk. And then it goes to where it's supposed to. Just wondering, as a beginner, how to understand the order flow and to be able to trade. I mean, is there any specific step approach? Okay, so here's what my step process would be. Um, for the trade, the process is come in, know everything that you can about that market, identify pieces of information that you can find that may predict future order flows. If you see beginning signs of any of those order flows coming into the market, I want to take the trade as early as possible with a very, very tight stop. If I see anything that contradicts that trade, then I'm out. Otherwise, I write it and I wait until I get to the liquidity hole. I get out, and with the whole time, I'm keeping an eye out for a contradicting flow, because if somebody comes in and sells it the other way, it's going to come back very quickly. Okay. That's the first thing. But the second thing is if you're just trying to be able to understand the order book a little bit better and read it a little bit better, here's the framework that I would use. And this is based off of a model called the Santa Fe model, which is kind of an interesting model, and it kind of has limited applications in the literature. But I find that it's very effective for teaching you how to read the order flow, because it makes a very important observation. There are really three actions that you can take. You can submit a limit order, you can cancel a limit order, and you can submit a market order. Those are the three actions, right? And given that you can do both buys and sells, that gives you 6 fundamental forces, right? So when I'm watching the book here, that's what I'm thinking. What are the 6 fundamental forces doing? Okay. So we've had a move down. Oh, hold on. Oh, it's just the baby. Hold on. Nope. Sorry about that. My toddler opened the door. He can open doors now, and I'm not used to locking them. I need to go and get those little handles that slide tonight. Anyways, where was I? Okay, so we had a move down. What did we see on the move down? Well, I start with market orders. So, because that's the easiest to see, right? I can look at my cumulative delta. There was more market sells than there were market buys through that whole move. Okay, sure. Right. Next thing I'm going to do is I'm going to look at these inside columns and look at what was behind me. How big are the numbers behind me? Well, there's a 600, a 500, but through a lot of these areas, the liquidity was actually really light. Okay. So that means that there's a lot of cancellations through that area, right? The market makers don't really like taking the fills there, right? But it's not a super aggressive order flow against them. So I don't think that the market makers are making a determination that there's possibly some informed trading and we're going to have a trend down and we're getting out of it. Probably not. So what could be another explanation for why they're doing that? Well, I think a really good one would be correlations. Market maker likes to look at a correlation and use that to determine what the correct price is. So do we see any correlations going on here that could maybe explain that move? Well, oil is moving up. Oil is moving up. There has been a lot of correlation with oil lately. I don't think that that explains it though. The 6J is actually going the wrong way. So, no, I right now it's maybe limited to this one market. So that's where I kind of come into now. Am I seeing like big icebergs in here? Am I seeing like big amounts of liquidity added and icebergs and stuff? That would be the limit, the stacking force on the buy side. No, not really seeing that. Not really seeing that. And then the same thing on the sell side. I'm not really seeing anything unusual there. There's just kind of like the usual flow in there. So that's why my take on what's been happening here lately is that it's just a natural oscillation of the market. And I probably shouldn't read anything into the fact that it moved down. Now, sometimes that accelerates and it turns into a big move, and I'm like, oh man, it had it. But if I don't have something that's predicting the orders, then I wasn't really going to catch it anyways, right? But that's the check. That's the check that you go through. That's what's going to help you understand what order flow is doing, right? And then the last thing that I will say is, again, I have a video. Well, I have a whole series about reading order flow on YouTube, so go and watch that. But the last episode of that, the stylized behaviors of markets, that's a really important video to watch. That's the stuff that we know the market does that retail traders never talk about and are going to help you the most. Captain Price doesn't want to play and seems a bit high. Yeah, listen, it's recovered now that the S&P 500 is on. We're a little bit above 1,000 contracts, but the treasuries are just screaming problems to me right now, man. Like, even though we're moving down at the moment and like interest rates are rising, I think that there are some liquidity problems in this market, and that we should be on the lookout for panics, essentially. Well, the S&P 500 is accelerated quite a bit here now that they're kind of pushing the downside, aren't they? Let's see here. So I haven't read too many tweets here. Easing tensions favor better market mood, although gold rallies anyway. Wall Street posting substantial gains ahead of the opening, trimming Monday's losses, technically bullish. That's FX Street. Lindsey Graham, if we seek to replace Russian oil by buying more oil from Venezuela and Iran, that would be the height of insanity. Trying to cut off oil dependency from a war criminal like Putin and replacing it with an oil from a religious Nazi like the Ayatollah is stupid, dangerous, and tells you how much the Biden administration is controlled by. Yeah, I agree with them 100% there, Lindsey. I 100% agree with you, Lindsey. I can't believe that we're saying, okay, we'll take our oil from Iran and Venezuela, but we won't take it from Russia. This whole situation is kind of dumb. Yeah. Well, now, why do you think that I'm a little perplexed, to be honest with you. I'm a little perplexed by the politicians. How should I put it? It's just like they seem so aggressively pursuing this thing that seems like a bad idea. Is it just the virtue signaling thing? I think that happens a lot amongst politicians. The desire to be viewed as righteous by other people is a very driving factor for politicians. That's part of how they get to where they are, right? So it could be that, but it's just like, geez, like you're really talking about a situation where an act of Congress could actively throw us into a recession. Now, yesterday the Germans said no. So one kind of has to wonder if Germany is pushing back against it so hard if it actually happens. But if Congress is going to push for it, the market, I don't think that's what the market is trading off of this morning, though. And don't think that that's what they're trading off of right now. Ukrainian officials pleased by U.S. ban on Russian oil and gas. Okay, so 1 minute ago, House Rep Speaker Pelosi tells the House of Representatives that the vote on the Russian oil embargo is moving forward. And interesting. Okay, so the 6J is definitely functioning as a safe haven trade at the moment. The treasuries are not. So normally if I see something that is so bad for the economy, you would tend to see treasuries buy, right? But that's not what's happening right now in fact is particularly on the 30-year, and we're getting very significant steepening here in across the curve. So that kind of seems more like in they think that further inflationary pressures because oil is going to get more expensive. Hmm. That's kind of a tough one. There might be a point at which going short yield and long treasuries here might make sense. But at the same time, I'm not so sure that the S&P 500 is reacting to that so hard. Like that piece of news would be something that I think could move us a good 30, 40 points, but they're above 4,200 right now. Well, what do you think? Do you think it's worth we'll do a sim order here? I'll do one right there. Oh, why do I have those? I don't want those. I like to do my sim trades naked. No stops. Appearing righteous is why hundreds of Western countries are shutting themselves out of the Russian market and shifting the costs onto us. Eh, I I think that sanctions was the correct move. Generally speaking, you can't allow that kind of what do we say aggression from an actor from big world actors like that. You can't let that sort of thing go unchallenged. Jeez. Okay, so the ranges on this are a little nuts. That's so close to the high. I'm gonna try and wait. Treasury is still getting pushed down. Okay. And I'll leave that one there. Not sanctions. Sanctions are normal. When was the last time hundreds of corporations backed out of a market simply because the government does stupid stuff? Well, okay, sure, but you know what? I think for some companies, um, it kind of depends on what their thinking is behind it, right? Like for Shell, for instance, they were still taking the oil and then they apologized for it and all of that stuff, right? So for Shell, they were definitely almost bullied into doing that, right? But okay, interesting. I might have missed a really good spot, but they're probably gonna still push. In fact, I might get a really strong push against me. You see, is that aggressive selling there at that price? They were definitely reacting to that price for some reason. Anyways, but I also think that for some companies, I think that it would be wise to make the calculation that like, okay, we were trying to grow in Russia, and any kind of further investment in that country is likely to, you know, be for naught, and so it's better for me to just completely pull out of there, you know? It really depends also on how strong their market is there, right? Hmm. Okay, let's see here. Second civilian evacuation convoy has started to leave Ukraine. Sumy City, says Ukrainian official. So I'm a little confused here just because um at the moment I am detecting a hint at least of bullishness. It seems like tensions easing, equity traders turning bullish, and I don't see where the easing is coming from. I don't see where the conditions are easing. In fact, it sounds to me like the Russians could be attacking into Kiev in the next 3 days, and I would expect that when they do so, that markets get really, really sour again. Okay, that's a little bit better. Hmm. I'm keeping a close eye on Twitter here for something that I don't know. Almost not able to fill me there. How is it that I pick the exact price where they stop? Wow. Okay. Well, it's a little better. Liquidity boost in Xeon. Well, when we started that move down, it was really started around when the 10-year turned on. We did build some more liquidity. What I'm seeing right now is a little bit different. There is some liquidity at 10 because that's the low of the session, and there is some liquidity at 08 half, which I don't know if that's significant or not. But the thing that I find interesting is the amount of contracts traded at 10 and 10 half, right? So there's a lot of contracts adding in there at 10 and 10 half, which could create a situation where price becomes constrained there for a while, unless we're really going to get a really strong impulse some direction. Well, one thing that we should note is that the equities have kind of been a little, I don't know how to put it. They've been all over the place. Okay. The TT DOM, I don't know if there's a way to put that in there on the TT DOM or not. I'm not sure. But anyways, the equities have kind of been all over the place. So I'm kind of wondering if equities start to sell again, do the treasuries back off? Oh, you've asked and there isn't? Well, that sucks. Yeah, in that case, you can still kind of keep track of it mentally, but yeah, those improvements that you see in the Jigsaw DOM are definitely helpful. Okay, so now that I caught that swing, and I did so mostly by taking on a lot of risk, Um, Seeing that kind of that snapback there kind of says to me that the larger cells not they're not ready to do that yet. They're not ready to do that yet. Where is I don't have it open. I have to open a new one of these windows. I want to see how much did that move against me, because I think that it was probably quite a bit. It might not have been actually a very good trade, even though it did. Even though it did, it is in the money at the moment. Oh, and filled. Cool. All right. Positions. Oh, won't tell me because I didn't have it open yet. Well, my average price was 42.10. How high did it get? 42.15. So it did have about 10 ticks against me. So it was roughly equal risk reward, roughly speaking. They have a good mobile app? Well, okay, I gotcha. Yeah, you could. I mean, if you were using Jigsaw and you're using CQG, you can pay extra every month to get CQG mobile. But I don't know. I wouldn't. I personally would never trade mobile. No way. I suppose that I would love to be able to take a swing position and keep track of it, but executing trades on my phone. Well, maybe I shouldn't have gotten out of that so quickly, but did you see they went all the way back up to the top end of that range? So this is just in the equities as well, very illiquid market. I'm really wondering here. The thing that's holding me back is the 30-year. The 30-year came back really hard, and we're seeing really strong steepening today. The yield curve is definitely, when you see really big moves like that in the spreads, that's a little bit more indicative of, an informed move. But um this is kind of a spot where maybe the treasuries would turn, but because of the way that move in ZB, I think I'm not going to, unless the treasuries, or sorry, unless equities like really start to fall apart. See, I'm seeing oil. Oil is moving higher. Oil is now at 128. Man, oil is just a monster right now. So see, that was exactly, well, okay. I missed it. Whatever it was, this I think a headline must have hit there. I can maybe if I'm so lucky. Okay, UK will announce ban on Russian oil imports. Oh, you know what? That wasn't even on my live account, so would have counted if I had gotten filled anyways. I think that's what just moved us there. No, that's not the one that I wanted. I wanted this one. I'm gonna delete that one. Posting it in Discord here for you. Biden doing a speech shortly. Hmm. Thought so. I thought so. Your micro golds got stopped out. Were you long gold? Hey, remember back in like November or December when I lost $1,000 trying to buy the dip in oil? Good times, good times. And now oil is like what, $70? It's double what it was. Would have been a 6,000, even on a micro contract, would have been like a $6,000 move. Ugh. Kills me. It kills me just to think about it, man. You were long and it stopped. That is, isn't it right? But it's just like what I was saying. It's like you can be informed and you know which way it's going to go. And for some reason, it always goes the opposite way first. It's like you have to wait for it to do the wrong thing and then get into it. What causes that to happen? So I'm pretty sure that spike that we saw in the treasury was because the UK will announce a ban on Russian oil imports. I think that the oil import ban is happening. And somebody was just saying, was a Purple Hazy Biden doing a speech shortly, I think, on banning Russian oil? I think it could be coming today. And one has to wonder if that doesn't lead to interest rates backing off. But at the moment, I think that the interest rates are still, we're very concerned about inflation too. Yeah, you can be right, but the majority of the money needs to agree with you. Well, let's not say the majority of the money. The majority of the new orders that come into the market after you have to agree with you. Yeah. But what I'm just wondering is, it seems to me like there is some sort of effect in the market that causes it to go the wrong way first. And what is that? Okay, so we were getting like wholesale inventories, which were good well, I don't know about good. 4% wholesale sales, 4% versus 1%. I'm guessing the sell-off was to get the big players late in the game at good price. Well, you can do this thing. There is a trade where you can try and take advantage of the inverse sine law by pushing it the wrong way first and then the other direction. That is a thing, yeah. But like we even see that even when like the big headlines are coming through, right? You get the big headline, you try and get in, things calm down, they stop you out, then it goes. It's really weird. It's got to be some sort of a hedging flow. Like there's got to be some amount of systemic trading that causes that to happen, and because it's such a big move that it goes more. Note that the liquidity immediately around us is kind of weakened a little bit after that little jump up. And see a couple of I put an order there at the 70, and I can see a couple of people trading there now. Hmm. Plus the correlations with all. Yeah, there could also be correlations. It could be like You come in, you're the primary market, you see the move, then all of these correlated assets move, and this moves the opposite way because of the correlations, and it could be them sorting out the correlations. That's actually a really good theory. Yeah. So the S&P is getting hammered here. Mm, no, thank you. That right there in the micro, it kind of looks like they're trying to coax me in. Mhm. I don't know. So I'm getting the flows that I was expecting in the ES. I probably shouldn't have taken that trade off because, it. I saw the flow come against me, but then as soon as that flow came against me was dissipated, they really started selling. So I had it right in the ES. The Treasury here, I maybe we have an opportunity, but they're being kind of sketchy about it. Uh, let's just check that for a moment and see what happens. No. So if I hit into it, I would like to see them, like those orders disappear. You can see that the spread is kind of a little bit more between 70 and 74. You think that ZN is pinned today? Maybe. They had that like really aggressive push up, but then since then it's kind of been lackadaisical and maybe even slightly to the sell side. Like the cumulative delta is negative through here, right? Even though the S&P 500 is really falling apart. And granted, we are still like right now we're around yesterday's close. So things are turning a little more dire. If I wasn't focused on a live trade, then I would maybe try getting back in on ES, but I'm just going to let it do its thing because otherwise I'm going to split my focus, right? Okay, so now we saw a little bit of a flow to the upside there, but it didn't hold. You're just seeing a lot of level 2 activity all of a sudden in the 10-year. Okay. There they go. I haven't seen the spread change yet. The information that we've been getting is that the oil ban is They're talking about the oil ban, that we may be getting official announcements of oil bans here today. We are starting to see a little bit of volume coming in long in the 10-year. Well, and the 5-year, frankly. But I didn't really see it in the 30, so I'm not seeing the spread reverse. It's still steepening, but let's just see. So if it's still steepening, then the 5-year is going to lead, right? You can see them; they ticked up there. Now they're hitting into 22.5, and so the 10-year ticks up 13. Biden, now, am I hearing he now wants? Yes, right. Yeah, the Biden administration has been negotiating with both Iran and Venezuela to try and buy oil from them. Buying oil from Venezuela would be such a big mistake, man. Oil is ripping, yeah. See, the thing is in oil, it's definitely going to cause oil to move up, right? S&P 500, I think that there's a lot of concerns about a recession off of that. So you see the S&P 500 sell off of it. The treasuries, they're kind of like they're not sure. Like, well, but that's inflation, right? I guess he gets to dictate which dictator is less morally wrong. Dude, it's just like all this does is it says, okay, if you're a dictator, you can go and do something awful, and yeah, all of the Western countries will ban your oil imports and everything, but it's a temporary thing. They'll forget about it in 5 years. Some other dictator will be more evil, and then they go and they switch and they need you again, right? Basically, if you're a dictator and you're in an oil country, you can do whatever you want in the long run. You don't think any orders regarding oil sanctions have already been placed? Well, I have not seen an official announcement from. So Pelosi is saying that they're going forward with the vote on an oil ban. I don't know how that will actually go, and I don't know what Biden thinks about it. But Biden could also impose it unilaterally, I believe. Pelosi pushing it in Congress could be a signal to Biden that you should just move on it, and maybe he comes out and he says something today. But then the UK we had a thing come across the wire that the UK was doing it, which just kind of, it's like it hasn't happened. It's not like cross the precipice, but you can just kind of see little things move in that direction, right? Yeah, stocks away historic U.S. ban on Russian energy. Oil nears $130 per barrel, tweets Forbes. Putin threatened the other day that we will see $300 a barrel oil if we impose an oil ban on Russia. The thing is I don't know if Venezuela and Iran really fix the problem anyways. The reality is that even without this Ukraine conflict, oil would probably be going up. Why? Because countries underinvested on oil exploration during COVID. There was this idea among the people in power that we were going to build back better, and that after the pandemic we would be less dependent on oil, which was kind of a dumb stance, wasn't it? But that's where we are. And because those oil companies didn't have any incentive to keep exploring, they didn't. And the energy supply is still not as high as it was before the 2020 crisis, as far as I understand. And then you've got the Saudis who are really mad at Biden because Biden has been, is sour over the Khashoggi killing, and it is frankly like this is the thing where it kind of gets a little bit crazy. And I'm not trying to be political, but this is just like what's going through my head right now is, oh man, we're gonna treat Venezuela better than we treat Iran right now, in some way, like I guess we're not sanctioning Iran or anything, but the Biden administration is being more friendly with Venezuela than it is with Saudi Arabia right now. Like, what the heck? A little weird, don't you think? A little weird. Okay, when did this move happen? 56. So it's been about 20 minutes. S&P 500 still looks pretty sad. They still look a little unhappy today. Oh man, I didn't, on that latest spat of stuff moving, the gold really took a spike there too. Hmm. Phoenix says, looks like crypto lending is going out the way of the dodo. Repay all your crypto loans by March 15th. We're going to need lots of tethers. What's this? Crypto.com. Please be informed that lending is no longer supported in your jurisdiction. Please take the steps to repay outstanding loans. That's going to be a problem because a lot of the people just took that money out and bought stuff with it. Then that's a problem. That's a problem for crypto right there. By March 15th. When is that? That's only like 7 days from now. Yeah, it's 1 week. Good grief. Are we when? I don't know. S&P 500 kind of doing something odd there. Oh, you're right. Sunday, March 13th. That'll be nice. Well, we spring forward, so it will be 6 o'clock when it would normally be 7 o'clock. Or it would be like 7 o'clock right now. Or no, sorry, it would be 9 o'clock right now. Means you're waking up earlier. You're waking up earlier, but you get more daylight. That'd be nice. It's starting to get nice. You know what's crazy is like last week, it was like getting to 70 degrees or something. Like it was getting nice. And I'm like, okay, maybe winter's over. And then huge snowstorm over the weekends. Okay. ES getting a pretty good bounce here. Now the average true range that I get in here, that has been getting stopped out over and over again. So I don't know. They're kind of at a point right here. Actually, no, they could go a little bit higher. They could get to like maybe even 95 in the ES. But I wonder. Now the Treasury moving a little bit higher there. And Bifinex tweets, Russia's not banned yet. Would it show this thread? No, I don't get. Oh. Oh, I see. That Russia has not banned the crypto lending though. I see. Okay, so there's an iceberg there at 13. That's pretty supportive. Iceberg and then uptick. But they're still like at the higher end of the range. Like they're gonna have to tick into 14 for it to change the chart. Okay, there you go. 12 lots. Thank you, Mr. 12 lot, for buying that and just making the chart look like a higher high, just for the sake of the price action traders out there. Now, on this last move, the spread was pretty flat. I am seeing some strong buying coming into the 10-year here, though. Look at that. We might this might run for us. Look at that. Oh man, now they're up at 16.5 so quick. 10:45 Eastern time. Biden to make announcement on oil ban. Yeah, I have not seen that from any of my trusted news squawks yet. Not yet. I've not heard it yet. In fact, I haven't heard anything on my squawk for a while now. Maybe I should refresh that and make sure that I didn't mute the tab or something. That the treasuries squeezed back up there to the top very quickly. Look at the cumulative delta here, man. Look at the cumulative delta. That came back so fast. They just all of the sudden, out of nowhere, I don't know if you can really see it right there. They just started buying that like mad. Oh my. Oh my. So why is the treasury all of a sudden panicking and the ES is not now? It's just as perplexing the other way, except for now the treasuries are really starting to trade like they think they know something. It's like you said it's a stop run, that's for sure. Somebody's panicking, I think. Okay, so what I'm seeing now at 19 is some big orders there, right? So that could be something. Well, okay, they pull back a little bit. So normally you would expect to get like a liquidity hole up at the top or something, but they moved up through that so quickly that they got sucked back into their wake instead. But this action right here at 19 could just be like regular market maker action. So on the higher time frame trade here, that might not necessarily mean a whole lot. We did just get a swing of about I'm gonna say 5,000 contracts going along in the 10-year. Okay, UK ban on Russian oil will include refined products and crude oil. So I think that they must be moving off of this news, which does give us some potential for more. Let's just give it a little bit of time to work this out. I'm still not seeing the S&P 500 fall. Yeah, someone somewhere knows something. Yeah, although we have to consider that it might not be the kind of something that we think it is, right? Like it could, like what's happening here in the treasuries could just be somebody needs what do we call it? Collateral. It could just be that somebody needs collateral really bad, right? And again, we come back into this thing where a move like that really suggests informed trading, but this market is so illiquid that you can get lots of moves like that. Okay, Putin is likely to remain undeterred and may escalate assault in Ukraine. I'm seeing from FX Macro on Twitter. The Treasury's still kind of settling into the wake and coming back to where the breakout was in the 1617 area. So this is kind of the pullback bounce trade, maybe. Although in this situation, I don't know if you should expect to see icebergs in here. Okay, this is U.S. Director of National Intelligence Haynes says Russian invasion of Ukraine produced shock to the geopolitical order, says Putin is likely to remain undeterred and may escalate assault in Ukraine. Are they reacting to that headline? Maybe. Treasury's moving, still equity's not really moving. Oil, actually through most of this hasn't really been moving. So when we first saw that first spike up in the treasuries, what else was moving? 6J was moving, gold was moving, copper's moving. You get a real flag here. So that headline there, that might be impacting markets, but that is kind of in line with my general intel from the beginning here, which is that I am hearing reports that Russians are positioning themselves around Kiev and that they could be starting the assault on the capital city in the next 3 days. Okay. Now we're maybe getting a change here in the ES. I need to zoom that out as far as it will let me there. Okay, a big order at 15. Oh, they traded into it, huh? Interesting. Okay, there's now the ES is really breaking. I think that they could come back and revisit those lows very easily now. Oh, the Walking Dead TV series is going to finish and then they're going to have spin-offs? Okay. Market orders are more prevalent on lower liquid. Yeah. Yeah, but I mean we're getting icebergs in places, right? Oh, there's a big iceberg at 15 and then they smashed through 14.5 pretty easily there. The 30-year is still very pressured. That might be because the spread is still steepening. I don't know. Could also be that people were taking trades on short-term headlines and so far those headlines aren't leading to continuation, so they might be just giving up. Okay, Hu Shixin. This is an important signal that Kiev is softening its attitude. It will embarrass Washington. Biden's imminent announcement of U.S. banning imports of Russian oil is to up the ante of confronting Russia, but the fulcrum of Kiev is shaking badly. And what's the picture here? Zelensky says Ukraine had lost interest in joining NATO. Okay, yeah, maybe. If Ukraine doesn't join NATO, is that really a loss for the West? I don't know about that. That's what Who's saying. The Who is full of crap. It's pretty how do I describe it? Pretty finicky here. Around 14.5, which is just above where they kind of started that run from. Well, I'll be very well, I'm already a little unhappy with how far it come back, right? I identified the spot, but I said this is a situation where it could keep going, and it didn't. It didn't. Took the risk, and it didn't work out. Yes, taking a good fall there, maybe trying to pull themselves out of it and make a higher low, but I think that the ES is going to go lower personally. Read up on the challenges Europe will face in trying to steer clear of Russian energy, says Bloomberg. Hmm. Earlier we said, hey, maybe somebody just really needs collateral, but it could also be a stop. It could have also been a stop run, right? Like there's quite a bit of volume going short, and for it to all come out that quickly is kind of says there was definitely some stop runs in there. And it sure is a lot of level 2 activity out here on the inside of the treasuries. Hmm. Aggressive takes there again on the sell side. I'm kind of wondering if I should just always take 20. If I had taken 20, I would have been happy with it. This is the best. It's the best time to lose money too. Just remember, right? I wouldn't necessarily call all of these swings that we're having in the ES no-brainers. It's pretty tense trade, wouldn't you? Wouldn't you agree? Okay, so by the way, that whole move up that we had has um completely come back in cumulative delta. Why your yield on TT is different from the micros? Well, because the 10-year is actually a 7-year and the 10-year is at the actual on the run. The yield on the cheapest to deliver is different than the on the run, especially in the 10-year, in the 10 and the 30, right? You would want to look at the cheapest to deliver on TN and UB, really. Okay, well, I did the right thing by scratching it. Sucks that I didn't take anything off of that. I knew what to do and I just didn't do it, didn't I? I thought that with the way that moved that there could be more, even though I saw the spot. Kind of has to make you wonder though. Kind of seems like, well, for starters, I think that people have got big positions on both ways, but also that move up. What was that? Was that a news headline? got some headlines around that time, but nothing that really ended up being as dominant as that action suggested that it maybe would have. So maybe it was just a mad dash for liquidity. Well, are they doing this thing where they stopped me out and now they're going to go? Because, yeah, I was at 870. Oh, wait, did they really come back that quickly on me? Holy shit. Holy shit. Dude, I would be back up $15 if I had just held on. But as soon as it came back to the break even, I was like, nope, nope. Well, that really sucks, huh? But it's just like what we were saying. It's like you get this move and then it always comes back and then it goes the way that you wanted it to. Them moving fast and the ES is just falling apart. Well, I tell you what, even though that's like, well, that's going to make me so sour. I probably shouldn't try trading again. Let it slip through my fingers, man. I had a trade. It was a good trade. I made 20. I was up $20 on it. Came all the way back. I scratched it at break even, and then it dropped right back down to the in the money $20 almost immediately after I scratched. You know what though? It's coming back here. It's coming back here. This is where me trading 2 contracts probably would have been really useful because I definitely would have taken one off at 20 with 2 contracts, right? Putin is angry, frustrated, and likely to double down in Ukraine with no regard for casualties. Alex says, I think you made the right call. Yeah. You know what, Alex? It's kind of one of those edge cases, where we don't really have solid information to tell us what to do in that situation either way. And I decided to go for the riskier play and it didn't work out. And if it had continued through, I would have looked like a genius, right? But I didn't necessarily do anything wrong. I guess one of the things that I'm kind of thinking of when I'm saying that was that there are quite a few new people here that have been talking this morning, and I was talking about those situations, and that was just a really good example of one where we had a really strong move up, and then you can see it, that 27.79 at 19, that is a real liquidity hole, that could stop price for a while. But because it's happened after such a strong move, you get this wake that sucks you back into it. So what I would expect to see is they get sucked back into the wake. They probably would have stuck around more at like 16, right? And then 45 minutes later, they continue. But instead, what we saw was somebody came in with an equally large meta order going back the exact opposite way, which is the one that kills you. Where's my pen keeps disappearing. There. So if we come to this chart, right? Okay. It really just won't stay on top, will it? Okay. A large meta order up. Liquidity hole. Short-term post-meta order impact. Okay. But then what did we see right here? Meta order the other way. And so for something that started right here, we actually end up going lower. Because of the wake. Because of the wake that they left right here. Right? So where do we go from here? Well, it's balanced back out. They could still do that. And if they did do that, it would probably be really easy for them to get through those highs because again, this is not going to be as much liquidity up here. There's not going to be as much liquidity up here as there will be down and around here. Although there was a pretty big, there was that, right? So, but it could be a while and we've got like 20 minutes left. So I don't know if for me it makes sense to take a trade, a trade off of it and everything. Let's see here, between 2,000 and 4,000 Russian troops have been killed in Ukraine conflict, says the CIA director. So this is all very fascinating action. Makes you wonder though, what's going on. The thing is that we did have some good information and we took a little bit of a risk early on and we, I didn't take the profits, but we did get some favorable excursion on it, didn't we? I got to work on my exits because what I'm continually seeing over and over again is I'll get really good excursion and get nothing out of it. This market is just too, it's not trending as well as I would like. There have been some good trends. This morning it certainly hasn't been trending at all though, is it? In the 10-year. You know what? I made a good call in the ES too. Could have made 40 points on that, but I only took 10. That was the exact opposite problem, right? That one I should have let it ride and I didn't. I got out. Although I guess they're both kind of the same thing where when I got retested, I got scared out. This zone is halfway between 5 and 6 hikes in terms of rates. So this is maybe where big players are taking bets on both sides. Yeah, I don't know. So when you're saying we're between 5 and 6 hikes, where are you making that determination? Do you have a price in the 10-year that you say is between 5 and 6? Or are you looking at the short-term funding rates? Which would be a more accurate assessment of that. By the way, we got even though we had that other excursion that would make me be like, I could have made 15, we still got pulled back in here. It's just the 30 came back more. You're looking at the 2-year. Oh, I gotcha. Because 1.65 would be 6, right? Between 5 and 6. Yep, I see. I gotcha. Yeah, I really wish I've been trying to do some work on it, but I've been having a hard time with it. We can make some calculations about where rates should go on a relative basis. It's kind of hard. I started making an indicator and I haven't finished it. I was making an indicator that was like, if you put in what the basis is and the dollar value of an interest rate, I could come in and based on how much it moved here in the 10-year, estimate how much the yield should move on this one. But Or I was more interested in the 5-year because the 5-year just looks so illiquid, and I would have thought that the 5-year would be a good place to play, but it's because of the liquidity, it's not. But that means maybe there's an opportunity for me. So if I could find a way to more programmatically determine what the most correct price is, like the right way would be to actually have a tape on 5-year and see what the yield it was on bonds actually trading in the cash market, right? But I digress. Much safer way to short oil. So I am okay. So remember earlier last week, was it Thursday, Friday? We were like, maybe we could take a short-term short on oil off of the Iran deal, but that kind of fizzled out. Like on the Iran deal, I think it makes an okay short-term trade, but I'm not so sure that you get oil from Iran and from Venezuela that resolves the crisis, right? That just brings us back to like even, but it doesn't solve the longer term issue in the market, you know? Hmm. Phoenix Exchange. Well, one way that you could get it is you could pay $100 for the, what is it, Refinitiv? No, that's not Refinitiv. I forget who it is. Why it starts with a Q. Anyways, and that will just tell you on the run yield. I mean, you can look at it. It's those CME tools, right? You can look at it delayed for free, but you pay $100 a month and then you can see it update live and you could trade off of that. Yeah. And I'm sure that it would be equal to what we have on here, but the question is it closer to 7.5 or closer to 7.9? Right. It's a pretty wide spread. So which side of the spread would be better for you to be on? Yeah, I did the trial. I did the trial, but I forget why I didn't like it. Didn't quite do what I thought it would. Well, the S&P 500 did break a lower low, but then almost immediately bounced. And the rest of these markets, well, gold has continued higher. Gold is doing awesome today. I wonder how much. You know what? I gotta say, my silver trade, it's been really frustrating that as well as gold and silver has been doing lately, I'm still down on that trade. But then I was also making money on my rare earth mining play. So it's been saving my portfolio. Yeah. Oh, there you go. Yeah. Made $58 today on silver, and that offset the losses in the rest of my portfolio. Rare earth element resources coming back a good 5% today after such a good run yesterday. Cool. Well, that kind of makes me wonder, or maybe I need to go and take a look out there. Maybe there's some news on that I missed because, well, let's do that right now. EMF. Did I say it last it shined just a week ago? I think it was further back than that because it was a week. So here's the thing. If the analysts at Goldman are all of a sudden bullish on it, then I'm definitely not going to be bearish. I tell you that much. I know these guys. I really respect their opinion. I know that a lot of people are like, oh, they're always wrong and they're trading against their clients. They don't understand. They don't understand how it actually works. Okay, these guys do their research. But a month ago, let's say a month ago, it was really frustrating. It was like I was still in it. I still was still holding it, obviously, but not because I liked the way that it was going, but because I knew what the risks were out there and that it would be reasonable to have. So I kept it. But yeah, it really changed. Okay, so let me come in here first. Yeah. There we go. Okay, so their pretty good move up was really more yesterday. Yeah, the 7th. News, tools, past week, let's say. No. Okay. So there hasn't been really any significant, just material stocks moving up. And the updates before that are from way further back. I'm going to come back to just search and do the past week. Yeah, no, there's not too much. It's still like here's the thing of this ticker that I'm in. If I look for results in the last week, only 3 pages of stuff. Only 3 pages of stuff. Okay, so do you see the flattener coming in? So even though the 10-year is still at the same place, we would be a little bit further because the flattener did start to happen. Which was kind of what I was hoping would happen when we reversed, but it just didn't quite go. So this is a little disappointing how it went, but I shouldn't stress about it too much. Yeah, okay. Now let's check on Yahoo. Do we get conversations? Has anybody said anything recently on it? Nope. Last comment on it was 13 days ago. Oh wait, that's top reactions. Let's do newest reactions. Okay. He says it's going to be years before the demonstration plant is built and operating. Yeah, probably. The CEO is still taking with a shovel. Yeah, there's not much going on with it. So it seems to me like that one is probably just moving with the rest of the space. Interesting. And the rest is kind of just meh. I guess while I'm thinking about it, another one that I had been involved in was Zillow. Yeah. Yikes. Like they got an okay jump there in February and then oops, nobody cares. This was oh hey, our losses weren't as much as expected and this is like them falling with the rest of the market. That's owie. This stock is just ouch. After this whole thing, where is it? The charts would have been like, hey, here's a breakout higher. Well, no, it's not working out that way. Maybe this and this, maybe, if we were so lucky. Nah. Could still see. I do think that we could see at some point a recovery back to here though. But I'd have to look at valuations. Man, the 30 years still up there, huh? Hmm. You know what though? If I was still in the trade, I think that if I was still in the trade that I would probably be more like on tilts doing so, because like we really haven't seen the wider move in the treasuries that we were really expecting from headlines. So it might still be worth it to be short yields. I could definitely see myself, if I still had my position at 70, trying to justify holding below 50, because there could be way more headlines today, and I do think that we're a little bit too far this way now all of a sudden. If we're going to ban Russian oil, you know what I mean? So, yeah. At the same time, I might also be thinking, well, I got my 20, let's just cut and run. Quit for the day. That's actually probably more likely what I'd be doing. If I had stayed in, I'd be like, okay, well, didn't go as far as I wanted. I don't want to watch it all day and just take the $20. Senate Majority Leader Schumer, there will be an additional $15 billion in COVID aid. What? Oh, this is a package for aid for Ukraine, maybe? I don't know if they're related. Well, how are we doing? Do we have many people on Share Vision? We got 2 still watching. At the beginning, it was only like 7, 8, 9. But I appreciate it. I've got to do better on the retention here, man. I got to be more entertaining, I guess. Most people don't want to hear what we're talking about. Although, when we were doing well, it was when we were talking about like kind of more how we trade, right? So I guess I should probably focus more on that, huh? 13.5 seems like a good price. I don't know if we really want to go short yields, probably should do it in the 30-year, huh? Although I do not like that spread. Ugh, five ticks, 5 ticks just to play for something that moves maybe 10 ticks. No, thank you. No, thank you. Giving up half your trade to the spread. Ugh. It's hard to tell if it's a classic liquidity crisis or simply a consequence of high volatility and uncertainty. I guess central banks will coordinate to add liquidity, whatever, starting by the ECB on Thursday. They just need to give us all a few $1 million. That's the government. The government should just start paying retail traders to be liquidity providers. That's what we need to do, folks. The robots, they can't be trusted. We need people. Give us some money. You give me $1 million, I will be putting it up there, and market making in the 10-year and helping solve. You give me $1 million and I can put a few hundred contracts up or something. Come on. I mean, I know it's unrealistic, but Biden is in charge. You never know what that guy's gonna do. Anyways, guys, I think it is time to go. I put the title today as "The World is Still on Fire," but I mean, they don't really look like they're on fire yet. I don't know. We should say, is the world still on fire? Is the world still on fire? Question mark. I don't know. Is the world still on fire? Find out next time on Capitalism. I think I screwed up the ending there. Save that. Hey guys, don't blow your accounts. You know what? We did, all things considered, coming out of a day like today without a significant loss is a win in my book, because this is usually when we would screw up super, super bad. So stay safe. We'll see you tomorrow. In the meantime, and you know, because Thursday is going to be the day of CPI, right? You liked it today, yeah. It could have been really bad, but we've done okay so far. But and you know what? Probably still some moves today, right? Especially in ES, but we'll just see what it does. I'll see you tomorrow. Stay profitable.